All right, so if for everyone out there who is on the path, their journey to wanting to learn how to trade futures, I know there's a lot of material out there, a lot of videos, a lot of content, a lot of different creators, and some are gurus or claim to be, whatever the case is. But I'm here to really just share with you how I trade, okay, through my experience of trading and what I personally do each and every day. Okay, I don't have the glitz and the glams and the cars and all that. I don't. For first and foremost, I don't care about none of that stuff. Okay, my true on passion here is to make an income from doing this. All right, so I'm very passionate about what I do and the time I spend here making this video content. Now I want to stop and say this before I get into today's video, okay? Because today's video is really surrounding the trading journey, okay? If I could look back 14 years ago, to basically where I almost started at, a certain strategy led me to become profitable, in which I'm going to share with you guys today, and I've talked about it in many videos. No matter how much I push or stress the strategy, the content, the concept surrounding the strategy, I know not everybody's going to get it. Some will, some won't. Some will have a million questions. Some will have 2 questions and get it. Everybody has a different learning curve. I understand that. But I want to stop and say this. If it is not for you, please do not, first of all, don't waste your time anywhere if something's not working for you or you can't see it eye to eye like someone else does. All right. Trust me, I've been there. I know. Sometimes you try to learn something and it may take you longer, and sometimes you may never get or to the understanding because some people just can't allow themselves to. That's the thing that bothers me the most is like I spent so much valuable time in creating this video content, and you're always going to have people, no matter what you do and how much you actually, really try to give every part of who you are and show people. They're just not going to get it. Maybe because of they're stuck in their old habits, their old ways. They don't have a trading plan. Their psychology is just everywhere. They don't know how to cut trades and get out of trades quick enough when they are in a trade and it's coming back against them. For example, when something's not working for me, I cut it very quick on in. All right. I'm looking for a big push in the market where the market will come back with its aggressive buying in areas of buying or selling. Okay. That's supply and demand. I'm very methodical and I think logical in regards to setups that I actually take. So I'm breaking them down mentally and I'm digesting it before I actually take the trade. So you have to understand that. And I know this is not for everybody. Trust me. You ever heard people say that trading's only maybe for the top 5% of the people? Yeah, because this stuff is not. It gets easier and it is easy, but it takes time. It's difficult from the beginning. It took me 2 years to get where I'm at today, and I'm still perfecting things because I'm always spending time working on not only myself, but working on going back and doing my homework. Okay, so I don't know what it is that people can't really see things the way the other people do. Sometimes I believe that not everybody is meant for this business. Okay, people have a greater calling sometimes, all right, and not everybody is not is supposed to come into this business of trading futures, okay, or forex or options or whatever it may be, or stocks. Okay, some people are destined and designed to do different things in life. This is just a rant. I know I'm saying this, but I'm saying this for a reason, because at some point people have to stop themselves and say, is this really for me or is this not? Okay, because I spent plenty of time making video content, and for anyone out there who watches it, it's either you're going to get it or you're not, and you're going to have to cut your losses and either move on and find something that works for you, or stick with it, okay, and ask questions. And again, I try my best to break things down as simple as possible. If you can find someone else that can show it to you better, then please do so, okay? But that's all I have to say. Trust me when I'm saying this. There's great and valuable content within this video that I'm getting ready to share with you for anyone that is into 2025, that's starting their journey to learn how to trade. Now we're getting into the video, okay? The meat and the substance, or the potatoes of what I want to talk about today. But I just want to get that off my chest, okay? Sometimes we just have to kind of have to rant a little bit, but I'm doing this for a reason, because I want people to really understand what I'm saying. The first part is because you have to really dig on the inner self and the inside of you and look to see if you have what it takes. Because if you could continue making the same mistake after the same mistake after the same mistake, you've got to stop at some point, check yourself, and really see, my psychology is not correct. 90% of this business starts up here. Okay, You should be able to look at the charts and understand which way the market's moving and understand which way to trade. Okay, but you got to control yourself. Now, what I want to share is just basically a rundown of the strategy and how I trade daily. Number one thing, and I talk about, it's basically 3 steps. Number one, structure the market. Got to get that right. Number 2, mark it up and using a higher base chart, regardless of what that is. Whether it's for me, like I'm using a 120 range chart, maybe using a 60-minute chart, maybe using some volume or tick chart just as well. Okay, whatever it may be, start from there. You have to use some means of a top-down analysis to start from somewhere, because it is better to mark up higher base charts for me, okay? Because bigger moves, the bigger part of the move happen on a higher base chart. Then I'm waiting for the market to come back to that area on the higher base chart that I mark up, right? The third part of it is once I have a zone, or the second part still, once I have a zone marked up on my higher base chart, then I'm moving down to my lower base chart to find a smaller zone inside of the higher base zone. So you're saying, what does that mean? Mark up your higher base chart first, that supply, that demand area. Then go to your lower base chart, okay? Watch the market come down or move up to, if it's coming down to an area of demand or moving up to an area of supply from a lower base chart, watch it retrace or pull back to that zone that you marked up on the higher base chart. And in the meantime, while it's doing that, find your smaller aggressive area of selling inside of the bigger zone off the higher base chart, okay? Because that's what you want to identify as the third part of the step in which you want to take your trade from. Now, of course, there's another big component, the most critical component or piece to it all is the imbalance or the gap that I talk about at the zone. That is what marks up or makes the difference of the trade being high probability versus low probability, okay? Now, we want to get the market direction correct, right? Look, this is not rocket science, okay? I promise you. You have to see what the market is doing right here. Would you be buying in this market condition right here? If you say yes, then stop now. Find something else to do, okay? Because you got to get this right one way or the other, or you will get railroaded time and time again. I see push, pullback, push, aggressive selling. I would only be looking to go short until the market shows its hand otherwise. What do I mean by otherwise? Well, where it's making highs, higher lows, highs, higher lows. What do we got here? A channel to the upside. For anyone that has a hard time really seeing this, I mean, it is so simple. What do we have? Do a trend channel. Wow. It's amazing how it falls on a trend, right? On a channel, okay? You should be able to visually see that without having to draw that, though, or use that tool. These are higher highs and higher lows. As long as we're making, higher highs and higher lows, we want to be looking for pullbacks to go long. But we've got to identify the reversal in the market. I've talked about this pattern a million times. There is what is an inverted, say, shoulder here, the head, and there is inverted shoulders going to the upside, or inverted shoulder going to the upside, because this really is the first push, the pullback, and then the breaker structure above the first area or the shoulder to the upside, okay? But we've got to see an area where the market is, lets us know that the market is reversing to where the market starts taking out buyers at a significant swing from where the market was pushing down, right here. I wouldn't be interested in really going long until the market broke first area structure going up and then took out some buyers going to the upside where there was a decent swing that it came off of to the downside. Once it does that, then I would be interested in looking for pullbacks to go long. Just like right here. Where did it break above this area here? Right. Basically right here. Well, let's see. No, right up in this area right here. So if you follow the swing setup here, higher highs, higher lows, pullback, breaking structure higher, all right, and say, okay, now I can look for pullback to go long because we broke above this high over here and we're making higher highs and higher lows, breaking structure to the upside. Yes, but there is no high probability zone with an imbalance or a gap attached back at the demand zone. For all my new people watching the video for the first time, the imbalance or gap I'm getting ready to show you very quickly, okay? Now, push up, there's no imbalance here. I'm going to show you where there is one. Push up, pull back, we broke, we are bullish now. Broke back to the upside again with aggressive buy-in. That's what we're looking for. We're looking for areas where there's big push, pull back. Another big push, aggressive buy-in to the upside. Now you should be able to see that clearly. All these bullish candles to the upside, leaving behind this beautiful area of demand. And there's an imbalance attached to it. Now let's talk about that. Okay, let me show you right quick. Take a look here. I'm going to try to blow this up as much as I can here. There is an imbalance right here where I just had this box, that zone drawn up. That's a demand zone that we're going to probably be interested in taking a loan from, right? But what I want to show you is that the imbalance is resting back where we marked or drew up the zone. Last bearish candle to the downside, bottom end of it pretty much right here. But because this bullish candle, the wick of it closed below it, we got to include that too. Now, from the top end of that bullish candle, that bearish candle, the wick of it, we look at the candle that broke above that last down candle, this one here. Then we look at the next candle. Why? Because we're looking to see how far back it's going to come to fill the zone. Now, this candle here that came back, the wick of it, that bullish candle only came back right here. So first what we want to mark is the area in which breaks above that bearish candle right there to the upside. This candle here. We mark the top end of the bearish candle. That's the starting point where we're first identifying the first part of the gap. Once this candle breaks and closes above, the next candle is going to dictate how far the gap is going to get closed in on as it pulls back. The wick of it came right here. So if the wick only came right there, there's a gap right here. There's an imbalance. There's an imbalance resting in the market that the market has to fill. Now I can safely draw my demand zone right here. The market comes back, fills the gap, reacts here. This is off of a higher base chart, but if you move down, this was a decent, well, you got to identify a smaller zone on the inside of the zone. But what I'm trying to show you is that this is how we are identifying when and how to mark up the higher base chart first. We got it. Push up, pull back, break a structure above the high here, aggressive buying. Okay, that's what I'm looking for. Now I got to see, is there a demand zone with an imbalance or gap, same thing, back at the zone right here. Okay, high probability zone now. Now I got a high probability demand zone that I can wait for the market to patiently pull back to. And while it's retracing back, you just go down to your lower base chart and see if you can identify now a demand zone, a smaller demand zone on your lower base chart inside of the higher base demand zone. Okay, so I want to show you for an example here. Okay, so that would be a push when it comes lower to look for a setup to go long, right? Now, what I want to show you too is at any given point, the market can change its direction, okay? It can change its direction. This is what I struggled with 14 years ago when I was trying to figure out trading, when I was trying to really understand structure, and it took me 2 years really to get there. I was taking setups on pullbacks and every little pullback, and eventually I found out that it didn't really start to click and work for me until I started understanding structure in the market, because structure is everything. That's going to help me identify and let me know which way I really need to be trading. Okay. Even though the market could be pushing up to the upside on a lower base chart and look bullish, it could be bearish on the higher base chart. So why am I going long against the higher base chart? Higher base chart is bearish. Lower base chart is bullish. I shouldn't be going long, right? Unless you know how to counter trend trade for quick scalps very quick. Now, here is the reversal pattern, okay? To the downside. Left shoulder, the head, push down, pull back, small right shoulder, break structure below here. But in verse of what I just said earlier, we've got to wait for the market to do what? Take out structure or sellers coming down right here. Big swing. We want to see that break, okay? Below. When it breaks below, look what we got here. Swing down, break a structure here and here. Pull back right here. What do we got here? We've got a supply zone. Supply is aggressive selling. Okay? Aggressive selling. All right. Let me look up to see, is there a supply area? Okay? Because now the market has shown its hand where it's reversing to the downside. And is it high probability? Meaning a gap back at the zone. The gap is on this candle right here. And there is a gap on that candle right there, because this candle here, when it came down, all right, this candle closed below the last bullish candle to the upside. The next candle is going to dictate how far back, if or at all, it's going to close back up to the zone. Once we mark off the zone, right here is as far as it went right here. So there's still some gap right there in imbalance resting. Market comes down, comes down, and then it comes back to the zone, fills the gap, resting back at that zone. All right, and this is where we move down to to our lower base chart to find the zone within the zone. We've got the 120, the higher base zone mark. Now we can switch down to our lower base chart and wait patiently for it to come back to. Let's do that now. Now we're in the 24 range chart, okay? That box there, that's that higher base zone that we have marked up on the 120 that I just showed you, okay? We're down here and the market's retracing back to the area. As it's retracing back to the area, we know that, okay, we're waiting to see if it's going to tap the zone, right? But we can go ahead and identify and look to see inside the zone, is there a supply area in which the market could, react at, okay? As we see it retrace back, there's nothing here that's high probability, okay? Where there's a gap attached to the actual supply zone. The same thing or same way when we marked up the higher base chart, all right? There is a supply area right here, this aggressive selling right here, but the market never comes back and tap that area. So many people ask me all the time, if there is not a supply area and what we're looking for, basically scaling down to a lower base chart once we've identified the higher base chart, what do we do? How do I can go back and find a zone? Okay, well, being that we are bearish now on the higher base chart, we want to follow suit with the lower base chart, right? And because we couldn't find a zone, a smaller base zone of supply on the inside of the higher base zone, then wait for the market to show its hand where it starts to move lower and start to break structure below, okay? So where we got a push down here, a pullback, aggressive selling, push down here, a pullback, and then more. So, we're looking for the market to react at some area of supply that's created, okay? So if I was to draw this for you based upon what took place as the market was coming down, okay, so we see it right here, all right? Pulls back, little swing, pulls back, bigger swing, pulls back, and then breaks lower, okay? As you can see that there. Now, as it's making these small little runs to the downside, all right? To the downside, there's no high probability zone. This is a low probability area right here, so I wouldn't mark that up. Comes back down, coming back, nothing there. Right here, there is. Why? Aggressive selling, pullback, breaking structure below this area here, and there is a gap or imbalance resting on the zone here. So I would mark that up, and I did have that marked right there. And this would be the area where I will look for the market to react and take my trade, going short in the same direction as the higher base chart. And now we identified a zone. It wasn't on the inside of the zone, but I waited for something to happen once we tapped into the 120. Nothing being there, then I wait for the market to show me a good setup where it's breaking structure aggressively to the downside, and I pull back to a freshly created supply zone. Now, let's look at the zone that I just showed you prior to, okay? Right here. All right, so we see the higher base demand zone that we marked up, right? Okay, so we just moved down to the lower base chart, and we're waiting for the market to come back to it. So let's move down to the 24 range. That's that higher base zone right here. As it's coming down to it, I'm looking to see within this zone if there is a demand zone on the inside of it, right? For a 24 range demand zone, a smaller, high probability, lower base or lower time frame chart demand zone. There's one right here, but it's not a high probability one. This would have been more ideal because this swing right here, okay, all right there, this right here is the one that broke above this area of structure right here. So this would be ideal more so, all right? And you see when the market came back to it, it reacted at it again. Because this little swing right here, if it was a high probability zone, okay? But it's not because it's hard to see it because we're on a lower base chart. But there's no imbalance or gap on that zone there, okay? If there was, then it'd be beautiful. I mean, it'd be more, it would entice me more to want to definitely take that trade if it got there. Now, there is a demand zone resting down here as well. You can see the aggressive buying, and it's just strictly a demand zone. It doesn't have a breaker structure on it or attached to it, okay? A breaker structure is when the market breaks above an area, like where it took out something, it's like, where it took out a swing, okay? This is a demand area, but it didn't take out anything as it in a full swing. Let's show you an example. Like right here, the market pushed up, pulled back, pushed up higher, okay? This little small swing right here took out that area structure right there to the upside. So it has this little demand area has actually broke structure above. So it actually pushed up, pulled back, and broke structure, okay? Broke some area structure. So not only is it a demand zone, but it also took out some area structure back to the upside. Hopefully that makes sense. So this would be the better zone in which I would like to trade from because we have a zone, if it was high probability again, but with an imbalance attached to it right here, but it's not, okay? If it was, I would definitely have taken that trade right there. the market comes down to this zone right here where there's a demand area. Can it react at it? Yes, it is a demand area. Okay, the market can react at that demand area, and you see that it did. Okay, it's just I like to see where there's a breaker structure with a demand or supply zone attached to it. All right, that makes sense. But as you can see, it did react right there, and it goes up to the upside. I'm gonna show you one more example right quick. All right, here's a perfect example. Another one. This is a supply area right here. Okay, take a look. This happened around 3:15 on the 27th, I believe, which is we marked up the higher base chart because we were breaking structure lower, bearish to the downside. Supply area. Why do we mark up the supply area here? Because we got aggressive selling, pullback with more aggressive selling follow suit. This little, small little area of supply right here. This is what broke structure to the downside. Okay, and it is a supply area. So we have a supply zone and it broke structure. Okay, so when it pulls back to it right here, there is an imbalance or gap attached to it as well. So we mark that. We can see this is high probability. So then, once we see it breaking structure right here, we're waiting for it to come back to this area here around 3:15. This is it right here when it comes back to it. Now we just got to look. So just as it's approaching back to that zone there, then start to look on the inside and see is there a lower base, high probability supply zone on the inside of our larger 120 range zone. Yes, push down, pull back, break, structure below this area. What was the area of supply that broke through an area of structure to the downside? This right here. Push down, pull back, broke structure below this area here. Pulls back to it. Okay, high probability we got an imbalance or gap attached to it. I'm taking that trade when it gets to it. All right, that is what makes sense. So you can have a supply zone, you can have a demand zone, but does it have a breaker structure attached to it, or where it's breaking through an area structure? Okay, so kind of let that kind of resonate in your mind. So I'm saying that for a reason, guys, because this is what helped me first and foremost identifying structure, and then developing a strategy that worked around that worked for me. But it's all about chart confluence. The more confluence I was able to have and bring into the fold, meaning marking up a higher base chart first and then a lower base chart, that is what started working for me. Because taking a trade straight from one chart, like, can I take a trade straight from this higher base chart right here off the 120? Yeah, I can do that. But again, the market's it can stop wherever it wants to stop us, stop it. Like right here, this is aggressive buying back to the upside right here. So it reacted off that zone. If I was to trade this off the higher base chart right here, it's like, where would I be aiming for? Well, I know the market could probably stop in this area right here because it's aggressive buying to the upside. So it can react in this small area right here, okay, or it's larger area, really, to be honest with you, on the lower base chart. But either way, what I'm trying to say, that's the purpose of moving down to a lower base chart, to get into a more redefined or refined zone or price location area and get into a better price point. Okay, and one thing you always have to keep in mind too is price action. Look, this is a major low. The market starts pushing to the upside. This is a major high right here. So when we start folding back right here, we're just taking out these minor areas of structure coming to the downside. So when the market did come down here, all right, come down to this area, like say right here, okay, what is it bumping up against pretty much? It's bumping up against a minor area of structure or a swing right here. So when the market came down right here and then it finally pushed back up, all right, say for example here, we are now bearish to the downside, looking for maybe a possible setup because we're breaking structure lower now to actually go short. You got to be mindful as far as what's below you as well. Meaning not only right here, but looking to the left-hand side of the chart just as well. There is an area which was an area of demand right below, in which the market can still react at. Yep, you see it push down right here, but then when it pushes back up to the upside, it can still react because this is still an area which is now an area of support. Okay, so that's the purpose, the reason why I'm saying you always got to be mindful of what's above you and below you when you're trading. If I'm interested in going short right here, I do go short here based on and looking at my higher base chart. I also got to pay attention to the higher. I'm sorry, guys. Once I go short, okay, when I've got the zone within the zone, so I'm going short for my lower base chart, I need to pay attention to also what's below me on the higher base chart as well. Also looking to the left, there's support resting right here. This was a area of structure where there was a beautiful area, a breaker structure right here where there was aggressive buying that came out of this area right here. All right, so the market came back. what did it do? It just wicked that area out. It took out liquidity right here just to push back to the upside, but now it taps into a supply area here. So this area here is an actual area of support, and it was an area of demand right here, okay? All right, so be very mindful of that, and that's the reason why. So at that point there, we are, yeah, okay, we could say we could look for opportunities to go short, but in reality, the market could turn and start breaking structure back to the upside because we haven't taken out a major area of structure yet. We've taken out minor areas, so we can trade both ways in a sense. Going short because we're breaking structure, taking out minor area of structure, coming to the downside. But the moment it starts turning back around, it may want to target that high and take out that major area of structure back to the upside. All right. So it pushes up. Maybe you got into a trade right here. We found a zone within the zone, which I just showed you right here. And you're taking the trade, coming back down to the downside. So always be mindful of what's resting right below you when you take these trades or above you. All right. So anyways, I just wanted to share that with you guys. Let you know, kind of how I look at structure, what am I, my reading with my eyes, as far as the flow of the market and things of that nature in reference to types of setups to take surrounding the actual strategy. So everything has to come into the fold. All right. And it took me time to get there. And this is the reason why I'm making the video content, because I'm trying to kind of curb other people's time frame. So, but I know not everybody's going to get it. And again, you have to find something that consistently works for you. What I'm showing and sharing, it may not work for you, okay? But for all those that are interested, that want to become elite channel supporters, okay? That's where I go into great detail about the trade setups that I actually take, and I break them down. The ones that I post over on our Discord community. I took two trades today, and I posted those entries over on Discord, and I'll be breaking those down today to all the elite channel members. So if you want to become an elite channel member, the link is down in the description portion of the video. If you choose to, and you want to become a Discord member, it's free, okay? So the first link is a Discord. The second one is to become an elite channel supporter. If you want to become an elite channel supporter, it's only $6.99 a month. Just think about it, okay? How much do you spend on price a cup of coffee a day, all right? Or whatever you spend, it means maybe a breakfast sandwich or whatever it may be. Probably end up on the end of the week, maybe $50+ a week. Here's something that can be beneficial for you if you put some time and effort in doing so. I'm not making any guarantees, guys. I'm not saying that at all. You have to be able to put the time and effort in, back testing and forward testing the strategy. If it doesn't work, then move on and find something else that does. All right, but you got to really kind of put you got to put the time in. All right, you're not gonna learn this stuff overnight. Okay, but anyone who's interested, the link is down in the description portion of the video. Again, I will be breaking down trade that I took today because there's one in particular that I want to talk about because I think that people are still having a little bit of problem understanding about the correct or right zones to trade from. All right, in a sense. And again, the market's going to do what it wants to do. We do not control it. All right, understand that. All right, there's going to be times when you get to a market, to a trade, and you need to get out real quick if it's not going in your favor. I talk about that in many videos here on the channel. So again, if you want to become an elite channel supporter, the link is down below. Click on that link, and once you do, 2 tiers will pop up. Make sure to choose the second tier for $6.99. That's going to give you direct access to all the trade breakdown videos, the video playlist, and that great video that I covered surrounding market structure. If you're not a subscriber, please take the time to go ahead and sub by clicking on the subscribe button down below, making sure to turn your post notifications on by clicking that bell so you never miss one of the uploads here on the channel. All right, I'm trying to break things down, guys, so that you can understand it as simple as possible. But outside of that, if you found some value in today's video content, please do me the biggest favor and drop a like on the video. I'll definitely appreciate it. Take care, and I hope everyone, tomorrow's the end of the week, so there's one more trading day in the week, and please trade safely, okay? Please trade safely into the last trading day of the week. See everyone in the next video.